Welcome to Wage Cucking with JMO.
All right, welcome to another episode of the shitcoin.com podcast, Wage Cucking with JMO. I have a guest today, my friend David. David, how's it going?
Hey, doing well. Thanks for having me.
Glad to have you on, actually. Just before we start, give me a little bit of your history in terms of how you got into crypto and I guess a little bit of what you're working on right now.
Yeah, happy to talk a little bit more about my past, but more so happy to contribute to the podcast, and thanks for having me. I guess I started off my career as an investment banker at Morgan Stanley, the boring old stuff, but then went on to do my own startup in the event-based social networking space, kind of like benchmarking Eventbrite or Meetup.com, but for the China market. So sold that off and then went on to business school in China, where I essentially, caught the sort of ICO wave in 2016, 17, and really never looked back since. So during business school, I also worked at a large venture capital firm called Cucking Venture Partners. They run about $9 billion today, investing in like early consumer internet companies like Xiaomi, Bilibili, Ctrip and whatnot. So really got into it during my venture days, looking for essentially like early stage venture opportunities. Looked at a lot of sort of early stage projects like Ontology, Neo, and all of those sort of Chinese layer ones back in the days. So even though like Cucking wasn't able to participate, I participated a lot into just secondary market offerings, but then really wanted a more institutional look on how I wanted to do investing. So then I went to Huobi to lead their global investments, where I led investments into a lot of similar layer ones, but for sort of the global markets like Polkadot, Algorand, Terra, etc. So during my 3 years there, essentially ran investments for a while, and then went to lead Huobi Labs, which is like their internal incubator accelerator program, to look for some of the best assets and help them list on Huobi, but at the same time help them sort of get users in China and help them with sort of developing engagement and whatnot. So dating back to 2021, I sort of really made my foothold in the US, but during that time, Huobi actually wasn't very actively investing, but there was a ton of opportunities in the US as for venture capital investing. So then I spun out and did my own firm called OP Crypto, where Huobi, Bybit, a lot of other exchanges invested as sort of early LPs into the fund, but also got a lot of institutional backing from Wall Street and a lot of sort of the US institutions like Galaxy, DCG, etc. Been doing that for about the past year and a half, have about 20 portfolios thus far. And yeah, happy to share more about sort of what we do there.
That's great. It's almost like a blast from the past. When you mentioned the 2017 ICO wave and projects like Neo. Neo was formerly Ant Shares. I remember when it was Ant Shares, and I was buying it as an Ethereum competitor. I'm not sure what they're doing today or like how they're doing, but yeah, it's pretty interesting. It's pretty cool that you got into the crypto during that time. It was like a pretty exciting time. I think during that time, though, the market was pretty immature, I would describe it, in terms of like a lot of the ICO projects that were brought in front of VC companies to invest in. They would issue a token and they would have like a general mandate as to what they wanted to do, but it wasn't exactly clear what the value of the token was, what the business proposition was, but it didn't seem to matter. Everything went up until it didn't. So I wanted to kick this off with the general discussion on crypto VCs. You have quite a bit of experience. So one of the things I've been thinking about recently with the whole market turbulence, I'd say, from the bull market from starting in like 2020, maybe end of 2019, where Bitcoin ran up from just over 10K to almost 70K, and then the bear market that ensued after. So a lot of these crypto VC funds, that they take outside investment and they sort of derive their model from traditional finance, where you have like a 2 and 20 model or something similar to that. However, it seems like it's a pretty big issue in terms of these big funds that don't really reflect the volatility of crypto. For example, in like 2020, if a fund has that carry model of, let's say, 2 and 20, and they're up like 400, 500%, which is not that unreasonable. I mean, just holding Bitcoin would get you up 400, 500%. And then a lot of these same funds in the ensuing years are down like 60, 70, 80%. So their high watermark is virtually unattainable after that, right? If you operate one of these funds and you are looking at the condition of your fund and you see that like you took a performance fee at the end of 2021, and then now you have to like quadruple your fund in order to get another performance fee. The incentives in the funds aren't really aligned. So do you see this problem in funds, and do you have a solution?
So it depends on how funds are structured. For our fund in particular, we don't have this problem because we only take carry when we distribute capital, right? So any like unrealized gains, like we don't take carry on, right? So like our investors are always the first ones to get money before we as fund managers get money for ourselves, right? You know, management fee obviously is what keeps sort of the shop running, you know, our processes and sort of our analysts on board. But everything else other than that is always our LPs first. I think what you're talking about is like a lot of sort of funds are in the hybrid model, right? Where they not only do venture, which they side pocket, but they also have sort of secondary market.
They do a little bit of everything, right? They're like all inclusive, a bit of trading, a bit of arbitrage, a bit of venture capital.
Yeah. So I think some firms, I mean, obviously I don't run one of those firms, so I'm not the best person to speak of this, but I think some firms do take carry, but then once they're down, like they give some of that money back. That's one way to do it. The other way to do it is that like they have a hurdle rate essentially, right? So it's whatever they guarantee a X%, you know, return year over year. And then until they sort of hit that return, they take profits for everything that's beyond that, right? So yeah, I think amongst the funds that aggressively take year over year carry, that's sort of a frowned upon model, right? So any LP investor, like in that sort of LPA, you probably shouldn't agree with in the first place. But there are definitely funds that do that. And like, as you said, like it just almost, they sometimes they just choose like shut down the fund, which is
they sort of just give up, right?
It's extremely immoral, or they move on to the next fund or reban or whatever. But yeah, I mean, at the end of the day, like you just want to like, that's the importance of LPs doing diligence of the managers and also reading the docs to reflect proper incentive structure. So I think the way that we do it, I think is sort of best industry practice, is that like, you know, LPs should always be the ones getting money first. Ever do. So like if that's not done, then you know, I think that's the best way to align incentives.
I'd agree with that. So talk to me a little bit about OP Crypto. I guess your general investment thesis, maybe if you're looking for, in general, what kind of projects you invest in. Are they equity deals? Are they token deals? Is there a general time frame for these investments that you generally look for? Just basic stuff like that.
Yeah, so moving to the US in 2020, and there's a couple of months before setting up a fund, I saw a really big void in that none of the Western projects really understand what's happening in Asia. And there's no like institutional fund manager within the US markets that can really help them get access to Asia markets, you know, help them with exchange listings and ultimately, you know, help them really launch their product within sort of the massive retail consumer base that Asia has to provide. So essentially in 2021, I launched OP Crypto to really fill this void in being able to help a lot of these Western founders, you know, go to market in Asia and really capture a lot of that traction that's happening in that side of the world. So essentially what we look for obviously is first, like founders that actually need our help. I think that's extremely important, right? Like you don't want to just be, you know, follow all money and FOMO into projects that, you know, look good and, you know, other investors have invested in. I think one key thing that we look for is like founders that we can actually provide a significant value add, that we can demonstrate, you know, a lot of our value in you know, being their investor, right? Second, I think it's like investing in sub verticals where you really understand, right? So, you know, I used to be a pro gamer, so like we did a lot of gaming investments in the early onset of 2021, like before really gaming took off in a major way. So a lot of our early portfolios, as you can see, are like gaming infrastructure type of projects, you know, like Mirror Circle that, you know, was back when sort of the gaming guild model was still a thing. You know, they raised quite a lot of money on Balancer and eventually listed on Binance, and they still are one of the biggest, you know, gaming ecosystem investments that we've done. Gaming infrastructure for like asset interoperability, like Stardust, right? Even though they don't have a token, but they, you know, work as an underlying layer to make sure that, you know, all assets are captured in the right way, right? NFT lend, like gaming and NFT type lending, like re-NFT. Yeah, a bunch of these projects that, you know, we deem to be application layer infrastructure where like it's infra that eventually helps for mainstream adoption for Web3 applications, right? How do we make gaming experiences better for the normal user, right? How do we make digital collectibles like something that people can hold on for long term and have utility for, right? How do we make like, I guess, these social-fi projects, like the new type of Web3 social applications that people will use and choose to contribute and produce content for, rather than Twitter and Instagram and what we have right now, right? So a lot of these like more native application layers that we essentially invest in the middleware or the infra layer for that improves and enhances user engagement and experiences.
I want to talk a little bit more about the value add you were talking about. So maybe I want to say like 4 years ago, I know you have experience at Huobi, but a lot of the projects that were launching at the time, the value add for the big funds or the big company exchanges that had like VC arms was basically just exchange listings, right? Like getting their token on an exchange, like a major exchange like Binance or Huobi or OKX or something like that, just to get like the circulating supply moving. But today I feel like the market's matured a bit, where like a lot of the old VC models were basically to get into the early stages of these companies just from name. Like you see it with like the X3 Arrows Capitals guys, that they basically put in money in every single early stage project, and a lot of the allocations that they took, they were reselling, or they were just like looking to exit on the open market. But specifically today, as the crypto market matures a bit, what specifically do you think that like the big VC fund should be doing as a value add to the companies that they invest in?
Right. I think there's like actually significant differences between like what big VC funds add versus what like smaller, vintage funds that focus on pre-seed add, right? So I think when specifically mentioned about bigger stage funds, right, I think, Paradigm is probably the top of the Substack, where they help with, tokenomics, like a lot of engineering support, right? I think that's something that's a lot of it is undervalued, right? Like how much engineering support an early stage project need from the VC side, right? So I think it's just difficult enough, even just sourcing a developer for yourself, but having like in-house developers really help, push sort of the traction of the project pretty far. And also I think like I think big VCs now is like acting as sort of exchanges of the past, right? Like I think obviously right now, centralized exchange listings other than Binance is not as relevant as prior, where like the exchanges give you that stamp of approval, right? Whereas like I think now it's like a lot of what the marquee names for big VCs, it's like more so acting in place of that exchange. So it's like projects need validation, like projects need sort of that stamp of approval from like Paradigm or Andreessen or some of these big funds so that they can get like partnerships, so they can get user acquisition, so they can get global market share in whatever products that they provide, right? So I think that's something that really only the bigger names can do. But I think on the pre-seed side, there's quite a lot of work to be done, where like a lot of it just early stage conversation, right? Like how do you find product market fit, right? How do you find key hires, right? How do you like handhold a lot of these founders to thinking the right way? And a lot of them are like Web2 people, right? That you really have to like tell them sort of the ways of Web3 world, but at the same time, putting them in touch with people that they can really work on their products at the earlier stages and really battle test what they're doing, right?
I think the whole exchange listing thing is sort of trivial at this point, given the rise of DEXs and the volume on just on chain, and like FTX going down, a lot of the major exchange volumes decreasing. So I wanted to ask, like for the companies that you do invest in, let's say like the pre-seed or the very early stage companies, is there like a lot of day-to-day communication with these companies? Like, are you pretty hands-on in terms of like the development of these companies as they develop a product, get to market, acquire users, stuff like that?
Yeah. I mean, I think each case varies differently, right? Obviously, we work a little bit more with the projects that we ultimately lead investment in, rather than some projects we follow on. I remember one of our probably earliest investments was into Scroll, right? Now obviously they're a pretty big name project now, but we were the first investor in them when they honestly didn't really have much. And talking with the founders then was really just like, how do we really compete in sort of the ever so competitive sort of ZK landscape, right? How do we put the team together, right? How do we ultimately, go to market and talk to some of the market VCs? And I remember like back then it was just like day-to-day conversations, right, on like how they should approach talking to this investor versus the other, so ultimately my previous shop, Cucking Venture Partners, they led their latest round at $1.8 billion valuation along with Tencent, right? So that's like a marquee sort of win for them. But a lot of what was talked about in early 2021 was just really about the foundational setup of things. And a lot of it is like, beyond Scroll as a standalone project, there's many other projects that, we have a weekly catch-ups with that we essentially act as almost like a founding team to the projects themselves to really help them on ramp and really help them really build traction in the early stages.
I wanted to talk a little bit about general crypto gaming projects. I come from a bit of a gaming background. I know you do as well. I have a thesis that in like the bull market in 2020, we got like our first taste of almost mainstream adoption of on-chain games. I guess the biggest one being, I guess Axie Infinity would be the biggest one, like the whole play to earn model. The biggest issue I saw with the whole system was that because the bull market was imminent, or it was coming up where all these altcoin, their valuations went through the roof, there wasn't really time to develop any like sustainable games. Like a lot of games went to market just because they wanted to capture the upside of like the market being so great at the time. But that leads to a sort of shitty product overall that comes to market, and it gives a sort of bad iteration of blockchain gaming. And then as the markets sort of cooled down, you see that the value of these tokens, the value of these NFTs, the player bases drop. A lot of these people were playing the game as a play to earn model, not for personal enjoyment, but to make small to medium amounts of money every day. So if we are in truly another cycle, another bull cycle, how do you see it playing out in terms of blockchain gaming?
Yeah, I think obviously the first iteration of anything is always going to be shitty, right? So I think ultimately like the play to earn economy, or the concept of play to earn, like actually is a pretty good iteration of what's eventually to come. Because obviously there are a lot of games that are purely fun, and I love to play without even being able to earn money, even if I did play professionally, but I played it for the love of the game. Eventually I got to a certain skill level that I was able to make money out of it. But I think that's sort of like where the whole crypto gaming or on-chain gaming is headed towards, right? It's like there's a lot of games that are simply unplayable if there wasn't certain economics involved in it. Like, I know you're a poker player. I play quite a lot of poker as well, right? Like poker is almost unplayable if you just play with play chips, right?
Yeah, absolutely.
Baccarat, a lot of different card games. So I think the next iteration of crypto gaming is like things that are not only fun to play, but has certain like monetary element to it, right? That just like 100x's or compounds sort of the playability of certain games beyond it being fun to be free to earn, right? So I think also like the level you need to be able to earn money from a game also drops significantly, right? Like I think back 20 years ago when I was a pro gamer, like you had to be like, it was harder to be like an esports competitive player than it is to like go into competitive like football or basketball or things like that. Right? So like I think nowadays it's like with sort of advent of different streaming platforms, right? Like anyone can almost be a version of pro gamer in their own right, but without having to really excel at certain skill levels, right? You can just be like a gamer that's like fun to watch, right? You don't have to be good, right? You could just be someone that's like pretty funny or like do some weird stuff. So I think it's like the whole gaming aspect of things is gonna allow streamers to much more easily make money from producing really good content, right? Much like influencers and TikTokers in their own right? So like I think the ability for streamers to really make money for themselves, to make that an entire industry in itself, is what's going to push sort of crypto gaming and Web3 gaming to the next level. And also like every single player within a game has an equal chance or has similar chances to make money for playing the game. Also like increases sort of the traction of certain games, the longevity of certain games, and also like increases the incentive structure of those games. Obviously, a lot of these games will take a longer time to develop, and there will be a lot of fuss in between. But I think there will be iterations of different games that come forth that not only is fun to play, but also like has really good economics that allow people to make it like a day-to-day job as well.
Uh-huh. So like the biggest problem I saw with the previous iterations of blockchain gaming was that I'm fine with the play to earn model, but a lot of the play to earn models didn't necessarily reward skill, but rather just time spent on the game. So it was more of like a manual labor type chore than like a skill-based job if you were to take that up professionally. The other issue I saw was if a game gets popular, we actually talked about this in the last podcast. If a game gets popular, it sort of prices out individuals that don't have like thousands of dollars to spend on a game. Like if you look at some of the in-game NFTs for the popular games, the cost of entry just to play at a reasonable level might start like $1,000, might go up to $10,000, which isn't that much in terms of in the crypto space where people are moving around quite a bit of money, but it sort of limits the audience that it appeals to, right? Because if your average gamer is used to paying like a one-time fee of like $20-$30 to have an enjoyable game to play, and they want to get into blockchain gaming, and it's a play to earn model where like there's like you generate tokens, you have to buy tokens, you have to buy NFTs to improve your status in the game. It sort of limits those people from accessing blockchain gaming. Did you see a way around this, or do you see this as an issue?
Yeah, so I think like would love to draw up a poker example, but I think ultimately that's only in the current iterations of the current games, right? So I think in future iteration of crypto gaming is like, you don't necessarily have to have the bankroll to play a certain game at certain levels. Like there will be existing infrastructure that like lends out certain items to you so that you can play and be competitive in certain fields, right? So a lot of this infrastructure will be put in place so that you have the tools that allows you to just really unleash your skill set. Like, for example, like if you're a really good poker player, right, and you can't afford to play at 100, 200, or whatever the stakes are at the highest stakes, like you can always get someone to like stake you effectively so that you drop down to the stakes that you're comfortable in, right? And you're able to still print at whatever stakes that you ultimately play in. I think it will be a similar level concept with crypto gaming, right? It's not always like you have all the items, like you have all the sort of different attributes, like you're always going to be the de facto winner, right? There are certain entry points at certain game levels that you're able to sort of loop around, right? And you as sort of, I guess, someone that with a lot of resources, you can stake a lot of these, minions or essentially farm for you, right? So I think like each sort of game will be their own game economy, and like you as sort of someone that is early entry into something can build your own empire from that. But it just like existing infrastructure currently like doesn't support for a lot of these sort of innovative sort of features to allow you to really expand sort of the horizons of like what is available. But I think eventually like all the tools will be in place so that you can enjoy the game without actually having to spend massive amounts of money.
It's interesting you mentioned the whole staking aspect of it. So there's a game called Steppen, which I'm sure you're familiar with, but the basic model is a walk to earn. They have in-game NFTs known as sneakers, and basically the better quality sneakers you get, the better multiplier, better rewards you get on your daily walks. So then you generate their emission token, which can be sold for profit on the Solana blockchain. But anyways, there was this whole economy of people staking other people by buying these in-game NFTs, these sneakers, and then having other people walk around for them. So like they would have, I know quite a few people outsource the walking to like people in Bangladesh, people in the Philippines and stuff like that, literally bought whole villages of people sneakers so they can generate profits on Steppen. So yeah, it's a pretty interesting economy that develops once one of these games takes off. I wanted to talk a little bit more about blockchain gaming. So in the future, I'd say a lot of the blockchain gaming right now is based on Ethereum, but there's a lot of layer twos that are developed with a specific purpose for gaming, specifically gaming transactions, just because Ethereum layer one base fees they can't really support like high volumes of transactions for people playing these games. So how do you see the future of gaming, especially when it's related to stuff that occurs on chain? Like, are there going to be more layer twos specifically built for specific games? Is there going to be like a few blockchain gaming NFT chain layer twos, or is there going to be like a separate chain specifically for blockchain gaming?
Yeah, I mean, I think technologically wise, it's still very up in the air, and that's what makes it so exciting as crypto investors to be able to invest in sort of under layer that can really support the future of Web3 gaming. So obviously, Sui is one of the front runners to really be the ones to like unlock this, right? But also at the same time, we thought Solana was going to be the one that we were able to power a lot of Web3 games on before they had their own sort of variety of problems. So I think again, like this is why the space itself is so exciting and like has so much opportunities left, is that like there's no correct answer to this, right? Like there could be multitudes of layer twos that even come out after Arbitrum, Optimism, and etc., right? Like that can really overtake the market and be specifically catered to gaming, right? Like Dapper really tried to do this, but obviously like still yet to be seen like what they accomplish in that own right. But like I mean, I think as time will tell, right? So definitely within the next 3 to 5 years at the latest, like we'll be able to see more mature gaming technology. And it's also the reason that like really Web3 gaming hasn't taken off is that like there isn't really good underlying infrastructure for games to be run on where users have a good experience and user can very easily sort of play into the in-game economics of it, right? So
yeah, I think that's one of the biggest issues, especially the whole technology barrier, because if you're trying to capture the gaming market, I'd say a large majority of the current gamers playing traditional games, like they use Steam, that they use Valve or whatever, and they get their games from there. They're not familiar with the nuances of how blockchains work, how especially if you're required to say use the Ethereum layer 2, like you would have to use Ethereum base layer, bridge some amount of money over in order to buy the in-game items, and then perform swaps, learn how to use, say, MetaMask, maybe learn how to use a hardware wallet. It seems like the barrier to entry is quite high, and a lot of gamers just don't really want to go through that process, would rather just like log in with their login password on a Steam, download a game, and immediately be able to play. So it seems like blockchain gaming still has quite a way to go in terms of capturing the market share of like the traditional gaming companies that exist right now. I think on the upside, though, I was discussing this the other day, but one thing blockchain gaming has for it is that the more traditional gaming companies are so like rigid in their ways. They're publicly traded companies. Their CEOs are basically boomers. They seem to have a huge reluctance to get into the blockchain space when they already have the gaming infrastructure in place to develop games. And it seems like a pretty easy leap for them to produce like a game in their pipeline and introduce some sort of like Web3 aspect within the game. But I don't think any major game developer has done that or is going to do that. Do you have any thoughts on that, or what these gaming companies should do?
Yeah, I mean, I think one of the biggest issues for gaming development is that like each big gaming conglomerate is so like siloed away from each other, right? They don't really share resources, right? Like anytime you want to make a new game, like you have to entirely start from scratch, and like a lot of resources are just wasted amongst each other by them not being as open source. So like I think the future of Web3 gaming is also like it will sort of unravel how easy it is to ultimately make a game, right? Like back when I was playing Pro Dota, right? Like Dota was just created from like a random Warcraft 3 map, right?
Yeah, it was. I used to play a lot of Dota, but back when it was just a Warcraft 3 mod. I actually never played the standalone game Dota, but yeah.
Right. So exactly, like that game was just created by just a random dude that like played Warcraft 3 for fun and like thought like that game could be iterated in like a completely new genre, right? So like when you think about like the future of Web3 gaming, it's like it's not necessarily like you need so much development resources that you have to have this massive team, have massive IPs. There's a lot of sort of blockades with regards to like what games can be created and how. So I think in the future, it's like a lot of this more templatized or like a lot of these like in-game infrastructure is already ready, but like you have to make it in like a Web3 native way. Then in the future, like people are very easily able to like create different iterations games that they like and transfer customer base, but also be owners of their own, gaming functions, right? So I remember myself, I created like different tower defenses games and like it was like came and played, right? Like no one really, and like that literally didn't really, I think took me like 2 days or something, right? So I think a lot of this, like we can really think, and a lot of this UGC content would then come forth so that, it's really allowing anyone to be sort of a game creator, right? Like giving them the tools, right? It's almost like right now, like anyone can create a PowerPoint deck, right? And like in the deck, we can really resemble what we want to present, and that's sort of our own piece of artwork, right? And like a gaming eventually will be done in a way, I think, where people can very easily use the foundational layer to be able to create fun games that they want to play great with their friends, or like they want to, for a more mass scale project, like a small studio could be using some of these resources and really launch and distribute, right? And also to be able to play internationally as well. I think back then it was just like US server versus China server, or like, there's like people weren't able to really engage in a way. I think in the future iterations of technology, like bandwidth will be in a way where like anyone can play with anyone anywhere without sort of too much.
I feel like a lot of people might listen to this and not know exactly what we're talking about here, who's never played Warcraft. But in Warcraft, which is a real-time strategy game, there was a custom map function, right, where individuals playing the game could sort of design their own mini games using like the same native layout of the game that Warcraft is played. So the game Dota was initially based off of Warcraft. The characters from Dota were the like same characters, but just renamed. Like the graphics were the same, but they were just renamed, and then the game was designed in a way that played completely different than Warcraft. And then like games like Tower Defenses, basically Tower Defenses is you build a bunch of towers, and then there are people that try to run through the towers and you try to kill them all. It's a very simple concept, but a lot of these games were specifically designed by people. And then there was a whole community. Basically, you could upload these maps online or these games online, and other people could play them, and they could give feedback as to the games they liked and stuff like that. So that would be incredible if Web3 gaming had some sort of custom map layout where there's like a modular game where not only people can participate in the initial game, but they can develop their own like nuances to the game, or honestly develop a completely different game within a game that people might enjoy more than the game itself. Like Dota 2 right now is far more popular than Warcraft 3, despite it being developed from the same engine as Warcraft 3. Do you know of any gaming companies that are building sort of that game infrastructure that allows for individuals to produce their own variants of certain games?
I think that's what like really like what Dapper is sort of envisioning to do, to build like underlying layer so that eventually anyone can spin up a game very easily. But I think it's just like
the execution. I think the execution from Dapper is not great, to say the least.
Right. But I think there eventually will come like like Immutable X. I think is trying a similar path, right? Like a lot of these sort of games will eventually not only build the infrastructure, but will build like different modular concepts where people like, if you want to create a MOBA like game, like use this infra. If you want to create an FPS game, like I think that's like, because of the underlying layer is not even complete, like it's like people are not able to go really into depth into the application or like genres of the game. But that's sort of the next iteration to come that people can be able to iterate on, right?
Yeah, it seems like blockchain gaming is still in its infancy right now, where but like the foundation really hasn't even been built for.
But also like people are able to, like, I think like with the rise of Zrun like a year or two back, like it's even able to create like a new genre of like sports betting, right? Where it's not necessarily on like real horses or like on like real people playing football or basketball, right? I think that's also a unique creation in itself, right? And like people can use like the Zrun infrastructure, right, to build like other casino, like it could be like cats, right, or it could be like whatever, right? Like different types, like amongst like I guess horse racing as a concept, like that could be iterated into a lot of different formats. I think like in that sense, then it's like Zrun was a success in being like a pioneer in sort of the way that people can reimagine sort of the way of the the digital sports.
Mhm.
And then from there, I think people will create different things that
Yeah,
might be.
I'm actually, it's funny I mentioned that because I'm actually quite bullish on the general blockchain gambling casino type thing. So like one of the first real use cases for Bitcoin back in, I want to say like 2011, 2012, was there's a gambling site called Satoshi Dice. But basically you could flip back and forth and then you could gamble up to like 100x multiplier. But the way the site worked was, it wouldn't be feasible today, but the way the site worked was, in order to place a bet, you had to send a transaction across the Bitcoin chain, and the hash, like the last number in the hash, determined whether like you won or lost the bet. So a big problem with like a lot of these like online casinos is that they're not transparent and they're not provably fair. Like if you play on like a third party casino and you're playing a game like roulette, you're not sure if the roulette wheel is rigged against you or not. But if all these casinos are built on chain, and there's easy ways of like using blockchain in order to develop a transparent and fair gambling model. So that's one aspect of Web3 crypto I'm pretty bullish on, just because it just makes sense, and like the previous iterations of it have been pretty good.
Yeah, and I think like spiraling from that, it just, I think like different like genres of what people view as entertainment, right? So instead of watching real people horse race, or watching people play basketball, or like I think like digital formats of like even like now, like people are playing like 2K21 competitively, right? It's literally showing other basketball players. Right. And like a lot of these games, I think will then, come to fruition where it's like people are then able to bet on these, different genres of sports. And obviously the whole online gambling thing, I think it's less of a technological problem, but more of like a licensing slash political slash, whether, anyone's able to do this without sort of some liability on their head. Right. So I think just to see like where that ultimately probably needs some type of licensing in gambling licensing format.
Yeah, I think that's a big problem with a lot of these projects, is that once you get big enough, or if you do enough volume, then you're like in the eyes of the regulators, right? That they see you doing like millions of dollars of bets every day. Then if you're doing like a couple $100 bets, even if the technology is the same, you'll never have any issue with regulators. But as you grow and as you expand, and as maybe you have a marketing budget, maybe you're advertising to certain regions and stuff like that, then the regulators will really go after you. The final thing I want to talk about before I let you go is the crypto scene in Asia compared to like the US or the West. What differences do you see in terms of like the markets, the people, just your general thoughts?
Yeah, I mean, Asia is definitely its own market. So every sort of institutional product in the US, like Asia has its own counterpart. And I would say most of the application layer products in Asia are actually significantly better than the counterparts, right? So I think what's really exciting about the Asia market going forward is that like people are not as affected by a lot of sort of the blow-ups that a lot of the US institutions had to face, like FTX, Voyager, BlockFi, etc. I think only thing that really impacted was Babel and like Luna, which actually didn't affect too much of like where I'm from, China, right? So I think very bullish on like Chinese retail market really spurring the next bull run, because a lot of people have a lot of cash on hand, and like with the new sort of Hong Kong regulations opening up and allowing sort of Hong Kong citizens to legally trade and sell trade crypto, I think that's a big highlight for China and I guess APAC region as a whole. And also with like the rise of application layer products, right? That's where like China does its best, and like that's where the biggest addressable market is. So and really us as early stage investors really looking for a lot of these ability online and mobilely, right? So I think a lot of that it's very exciting to see for the next year or two. And that's why I'm back in Asia now to look for opportunities. And also all the sort of doors are open now, with China now opening up the visa policies, and also like people being able to get in and out of the country pretty easy. it's all pretty positive signals, right? And literally, like every Chinese coin pump, like
Yeah,
any any coin that's like even remotely related to China.
we actually talked about this in the last podcast, but we talked a bit about the current narratives going on. And one thing I brought up was there's this whole China is bidding again narrative, or Asia is bidding again narrative, like the whole regulations in Hong Kong being more lax for individuals, like the Chinese market sitting on cash looking to bid. What do you think about that in terms of like the whole narrative that, you know, I see it all the time on Twitter, like Asia is buying, Asia's waking up, so the market's going to pump at a certain time. Like you think it's mostly just chatter, or is there any truth to the
Well,
Asian markets being different?
I think I mean from just history, right? Like Asia or China specifically has spurred almost every bull run in existence, right? So I think it's less so that like China is waking up or like, you know, Chinese investors are buying, but more so just like Chinese investors finally are like first able to buy, right? Like I think like they found new confidence that they're able to re-enter the market. A lot of them were dormant for the past 2 years because like China was just so restrictive on policies. So I think that sort of regulation leeway has allowed a lot of new entries into the industry, right? A lot of them don't have venture capital access like us institutional fund managers. So a lot of them just can only participate in the secondary market, right? So they buy the things that they know, which is like the China coins, right? Like with that their friends tell them, or like, you know, things like that, right? So a lot of that.
To me, it feels like it's like a whole different market, because like your average Western crypto guy will like log on to Twitter or like read something on Telegram. Well, like China, that they're in like different forums, that they're on Weibo, they're on WeChat. They're, you know, it's just like almost a completely different, like non-connected community sort of trading the same assets. So it's an interesting dynamic. So if Asia, or specifically China, would launch the next bull run, like what is the chatter like right now in terms of what they're bullish on? Like, for example, are they bullish on Ethereum and the current layer twos being developed on Ethereum, or are they more bullish on the alternate layer ones? Are they more bullish on like exchange tokens or on-chain gaming, stuff like that?
Yeah, I mean, it's hard to say. Like even within China, they have different groups amongst themselves, right? So like I think there's obviously like the big miner group, right? Where like they're extremely bullish recently on Filecoin, right? Like that's something that you can very easily explain to your grandma, and like they'll actually be able to understand like what Filecoin does, right? Like centralized storage. So that's been really taking off in the China market, because just like the first easily explainable concept to like your very commoner type of person, right? Everything else, I think people like there's still a lot of miners driving the narrative for better or worse, right? So a lot of it, like I think it has to do with like what are the different things that you can mine, right? So like Bitcoin, obviously, I think some people are even now talking about a Aleo, right? I'm not sure if you know about this project. I mean, ETC was even a thing for like a couple. So like, you know, we know nothing is really going on there. But yeah, so I think the mining aspect also is like a big factor in China, you know, knowing that like that's where most people have grown up to know, right? Amongst like the more, I guess, advanced stuff, I think that's like people are bullish on ZK in general, right? That's something that everyone says they understand, but they don't really understand. Like a cool people.
I want to see your average person in China explain to me how a ZK rollup works, and we'll go from there.
But that's definitely like the new thing that people are buying into. Like it's also something like everyone says ZK often enough that it will just catch you by the ear, right? So ZK is also, as like the whole subsector, will definitely get a lot of buy-in from you know, Chinese consumers. Yeah, with regards to like gaming and like a lot of the app layer stuff, I think like really like the app layer product itself will drive traction, right? I don't think there's a particular coin right now that's out there that people can just FOMO and buy into. But I think most people would really just buy into like a lot of what they know. Exchange coins, I think they've lost a lot of faith into, you know, what decentralized exchanges entail. People, but again, there's still a lot of Binance users, so you know they're quite, you know, supportive of that, right? But so like you just have, I think all in all, like there's different buckets of people supporting different things, and like people are very quick into FOMOing into like the next big thing. So like right now, I think people are just re-entering marketing, looking for new narratives, and
Uh-huh.
like this is actually one of the better times to now like launch interesting things to get people excited about.
Yeah, for sure. I think now is like a pretty good time to, if you have like an idea or a project that you've been sitting on, to launch, and especially if it would capture a large audience, or it would, be used by a good number of people. Like the market seems far more lively now than it did like 3, 6, 9 months ago. And like the downfall of FTX and like the ensuing bear market. Before I let you go today, thanks for coming on, by the way. It was a great talk. But is there anything else you wanted to mention, or anything you wanted to plug, like OP Crypto, your Twitter?
Oh yeah, sure. Yeah, my Twitter is David GAN 1818. And our Twitter is at OP Crypto VC. So yeah, feel free to follow us. We do share a lot of the content and insights that we know about not only Asia, but as a whole venture market in general. And we also have like a monthly newsletter that people can subscribe to, that you can find on Twitter, that we share a little bit more in-depth research and insights on what we see from at the fund level. And obviously welcome any founders to reach out to us for investments, or just for general advice in general, as you're thinking of the next thing.
Sounds good. So if you're listening to this and you're an early stage crypto founder and you're looking for advice or possible investment, you know where to look.
All right.
That's all I have for today. Thanks for coming on. I really appreciate your time.
Yeah. Thanks again for having me.
All right, no problem.